All right, what is going on, guys? Okay, so today we're going to be learning about fair value gaps. Now, this is kind of, last lesson was gap fills, and this is going to be fair value gaps. Now, these ones are, a little bit harder, especially if you're a new trader. So like I would just play with the gap fills, for now, unless again, the whole goal here is to learn. So once I do this lesson right here, go to the charts and when the market's open, just do a demo trade for yourself, and chart it and look at it and look at the candles and get your entries, get your exits, and then once you're comfortable enough to do it on your own, then now you can start making your trades on your live account. Okay, so what is a fair value gap? Okay, so a fair value gap is consistent of three candles, as you see here. Those are three bullish candles, and then those are three, or should I say, three green candles, three red candles. Okay, so what it is it's the point between this wick, the first candle wick, and the third candle wick. You see how there's a gap right there in between this wick and that wick? That is a fair value gap to the upside, and then to the downside, there's a fair value gap from this wick to this third candle wick right there to the downside. Okay, so these are what I use all the time as well, just along with gaps. Basically, what you would do, and again, we're going to go to the charts here in just a minute to look at them. But basically, what you would do is you would find your entry to go, whether it's to go long or to go short, whether you think the price is going to go up. Usually with fair value gaps to the upside like this, when they're like this, it's to go to the upside. Okay, and then when they're to the downside, they're going to go lower. Okay, so you're going to find your entry somewhere in here. Now I'll show you what you kind of want to look for, when you're trading fair value gaps once we go to the charts. But I just want you to understand what a fair value gap is and how to identify them and how to chart them. And again, once we go into the charts, we'll show you all that. Okay, so we will see you over. All right, so we're here on the charts. We're on the Amazon chart. Usually, when you're playing with fair value gaps, it's more of a day trader type thing. Again, you can find them on longer time frames, like a daily time frame or a 4 hour time frame. I'm not saying you can't find them there. You definitely can, 100%. But a lot of the times, like I personally use these when I'm scalping, when I'm just trying to make a quick trade, a day trade basically, and you'll find them more often as you get on the smaller time frames. Once you get on the bigger time frames, there'll be less of them. Okay, so we're on the 15-minute time frame. We're on Amazon, and as you can see, look at this. We got a perfect setup right here. So we got this candle right here. Okay, so there's the wick of this one, and there's the wick of that one, and then there's your gap. I identified the gap for you in the middle. Okay, so that's where you're going to draw your lines. So you're going to draw your lines. So like once these are, again, this is the markets are closed, right? So we're not seeing any price movement, obviously. But as the markets were open, as soon as you saw this candle close, or should I say, as soon as you saw this candle close, what you would have done is you would have put your line right there on this wick, and then you'd have been like, okay, let's see what this candle does. And then once you see this candle close and you're like, oh, look at that, there's a fair value gap right there, and then you're going to get your entry. Now what you want to look for is sometimes what will happen is you'll just see you see this red candle up here. Let me go up a little bit. See this red candle? Sometimes you'll see this red candle and it'll just break right through the fair value gap. It does happen. It doesn't, it happens a lot actually. So you have to have proper risk management. It doesn't mean just because that there's a fair value gap, doesn't mean that it's always going to play out. Okay, so you have to have proper risk management. You have to have your stop losses in place. You have to have your, okay, how much am I willing to lose on this trade? Okay, so like I said, sometimes that happens. Sometimes you get in this candle, and all of a sudden, boom, you get this nasty red candle. You get this nasty red candle or something like this. a freaking death candle right here. Let's see this red candle. Get this death candle and boom, just wipes you out. Okay. So like where I would put my stop loss is I would put my stop loss under this one or one of these, either this one or this one, but this one's longer. So I'd put my stop loss here just for in case, we had like a crazy event, something about tariffs. We had a report, Jerome Powell speaking, some sort of news event that would just wipe us out. That way you can protect your collateral. Yeah, you'll lose for sure. You'll lose some money. But again, you don't want it to go all the way freaking down here and lose even more. Okay. So, but what you want to look for is, let me get rid of this real quick. What you want to look for is you want to look for a longer wick up. Once you see that, that means that price action is forming, or should I say is coming in, and the bulls are trying to push the price up. Once you see that wick, a longer bullish wick, and it's pushing to the upside, that's what you want to see to make that play to go long. You see that would have worked out right there. Now let me show you another quick one on SoFi. I have another one identified here. Same thing, but on the downside. Now again, the markets aren't open, but you see this wick. There's my line drawn. There's my on my third wick. On my third candle right there. There's my line drawn. There's my fair value gap. So what you're going to want to look for is a wick that looks somewhere like that, and then there's your body sticking down. And then once you see that, now you can either go short on the stock if you're shorting it, or you could play puts or whatever your trading style is. Okay, so that's how you identify it to the downside. It'll be the same thing as I just showed you in the upside, but in reverse on the downside. Okay, so I hope that was easy enough. Again, what I would recommend is that you identify these and don't play with real money, but just identify them on the chart. And, once you identify them, you can just play them in your head and be like, cool, that one worked out. Cool, that one worked out. Cool, that one worked out. And then once you're comfortable enough to actually play with money, then you can start being like, okay, I'm going to throw some money in on this trade, to the downside or to the upside. Okay, so that's it for this one, and we'll see you in the next.